Okay, picture this for a second. Imagine taking absolutely everything you've worked for, your entire life savings, and handing it straight over to the single most trusted man on Wall Street. You do it because, well, he manages money for major celebrities, billionaires, massive charities, and even some of the biggest banks in the world. He promises you these steady profits year in and year out, completely immune to whatever crazy chaos is happening in the stock market. And you know what? For a long time, it actually works. Your statements show growth, you feel totally secure. But then, almost overnight, the entire illusion shatters. Welcome to This Explainer. Today, we're unpacking the Madoff mirage, anatomy of the world's greatest fraud.
$65 billion. Take a second to just let that number sink in. That is the staggering scale of the wealth that simply vanished into thin air. We aren't talking about a bad day at the market here or some minor accounting error. Thousands of families lost absolutely everything. Retirement funds just evaporated. Huge, well-established charities collapsed literally overnight. Lives were completely, irreparably destroyed. This whole event didn't just make global headlines, it cemented itself as the single largest Ponzi scheme in human history.
So, here is the crucial, multi-billion-dollar mystery we have to solve today. How did one man fool the world's smartest investors for decades? I mean, we're not just talking about amateur day traders making a risky bet. We are talking about massive financial institutions and highly educated experts who dedicate their entire lives to understanding money. How on earth did they all miss it? Well, to understand the mechanics of this massive deception, we really have to go back and start at the very beginning.
Section 1. The perfect reputation, weaponizing trust. Before his name became literally synonymous with fraud, Bernie Madoff was widely considered a financial genius. He was a pioneer. He methodically built this totally impregnable image. He started his investment business in New York way back in 1960 with just a few $1,000s. And over the decades, he didn't just play the market, he helped shape it. He was actually instrumental in modernizing electronic stock trading. His reputation grew so massive that he eventually served as the chairman of NASDAQ. Just think about the weight of that title for a second. Investors looked at that and thought, look, if Wall Street trusts this guy to run the actual exchange, why shouldn't we trust him with our money? And that brilliantly sets up his next tactic, strict exclusivity. He didn't beg people for money. Actually, he kind of acted like he was doing you a massive favor just by letting you invest with him. Getting into his fund was notoriously difficult. And, human nature being what it is, that exclusivity created total FOMO. It made people blindly beg to hand over their cash.
Section 2. Anatomy of the illusion. Deconstructing the fraud. Madoff basically sold the world this secret formula. He pitched a highly sophisticated trading system that supposedly generated steady, magical consistency, no matter what the rest of the market was doing. Every single month, investors got these statements showing perfectly believable gains. It was never anything too wild or outrageous, just absolute perfect consistency. That was the genius of his pitch. But the reality behind closed doors? It was a total ghost town. There were no secret trades. In fact, most of the billions of dollars given to him weren't even being invested in the market at all. He was literally just printing up fake statements and using the money he got from new investors to pay off the old ones.
So, at its core, this was just a classic Ponzi scheme. As we know, that means the returns being paid out to the existing investors were funded entirely by the fresh capital coming in from new investors, rather than from any actual profit earned by a legitimate business.
The brutal mathematical reality of Madoff's crime operated on this ridiculously simple, never-ending loop. Step 1. Take new money. Step 2, use that money to pay the older investors, which perfectly maintains the illusion of success. Step 3, require a constant, never-ending stream of more victims, forever. As long as the cash flowing in was greater than the cash people wanted to pull out, everything looked totally normal on the surface. But structurally, this meant the fraud was mathematically doomed to fail from day one. It was literally always a ticking time bomb.
Section 3. The cracks and collapse. Ignored warnings and the 2008 catalyst.
There's no way these profits are real. Now, that quote wasn't said after everything collapsed. That was the actual conclusion of a financial analyst named Harry Markopolos, who spent years actively studying Madoff's reported returns long before the scheme fell apart. He looked at the underlying math and immediately realized it was impossible. He repeatedly alerted U.S. regulators, he sounded the alarm again and again and again, but almost nobody listened. Why? Because of that Wall Street pedigree we talked about earlier. Madoff's reputation was so untouchable that banks, investors, and even the regulators themselves firmly believed he couldn't possibly be lying. His pristine reputation was the exact shield that protected his fraud.
So, while the business launched way back in 1960 and built up decades of blind trust, the ultimate catalyst for its demise was 2008. The global financial crisis hits.
Markets absolutely crash, investors panic, and suddenly everybody wants to withdraw their cash at the exact same time. Madoff faced billions of dollars in withdrawal requests all at once. But remember the reality we just discussed? The money simply didn't exist. Unable to maintain the illusion any longer, he finally confessed to his sons that his entire business was one gigantic lie. They immediately went to the authorities, and within days, the FBI arrested him. Wall Street stood completely frozen in shock. By 2009, Madoff pled guilty and was handed the absolute maximum sentence legally possible, 150 years in prison. And in 2021, his story ends with him dying behind bars at the age of 82. His empire and his legendary reputation entirely destroyed.
Section 4. The tragic human cost, beyond the billions.
You know, it is incredibly easy to just get lost in the sheer massive size of the numbers and the crazy mechanics of the crime itself. But the real tragedy here was the people. We're talking about retirees who suddenly lost their entire life savings and had to go right back into the workforce. Families who saw their kids' college funds completely wiped out in a single afternoon. Vital charities were forced to shut their doors permanently because their entire endowments vanished. And yes, billionaires and massive hedge funds were defrauded too, but some of these victims had invested literally every single dollar they owned with Bernie Madoff. Some investors even passed away fully believing their families were financially secure, only for their loved ones to inherit absolutely nothing. The emotional devastation was just impossible to calculate. Businesses failed, countless families spent years just trying to survive, and tragically, several people directly connected to the scandal took their own lives. It was, in every sense of the word, a profound human catastrophe.
Which brings us to the core lesson of this entire explainer. The greatest robberies happen without a single gun. Bernie Madoff didn't fool the entire world because he looked dangerous or suspicious. He fooled them precisely because he looked completely wonderfully trustworthy. He understood a very dark but incredibly powerful truth. People don't actually invest in numbers. They invest in confidence. This whole nightmare didn't begin with greed on the part of the investors. It began with trust. Blind trust. It's a stark, painful reminder that an impenetrable reputation is absolutely never a substitute for actual proof and transparency. If something seems impossibly consistent, you have to ask questions.
Which leaves us with one final, deeply unsettling thought to chew on. Could Bernie Madoff happen again? With all the new regulations, all the advanced technology, and all the hard lessons we supposedly learned from $65 billion evaporating, could someone weaponize trust to this degree today, just under a completely different name? It's something you really have to wonder about the next time you see an investment opportunity that seems just a little too perfect. Thank you so much for joining me for this explainer. Keep questioning, keep learning, and I'll see you next time.